Good morning, traders. It's 8:02 a.m. Chicago time on the last day of November. It is November 30th, 2020. Thanks for joining me on episode number 1888. Derivatives trading involves substantial risk of loss. It is not suitable for all investors. Past performance is not necessarily indicative of future results. So we're going to immediately go into our summary sheet here, which you can find on Twitter at Conv Trading, CONV Trading. Mike is hot. Okay, thank you. Let's see what's going on here. Let's fix that real quick. All right, cool. Is that better? Hopefully. It's really that loud, huh? Okay. Hopefully this is a little bit better. Is this better? Test 1, 2, 3, 1, 2, 3. I don't want to blow out your ears. Yeah. All right. Okay. Guessing this is better for you. Not too loud. Okay, very cool. So this is a summary sheet available at twitter.com/conf trading every day. It summarizes the current day's action. Today we're looking at the key pieces. Of course, U.S. stimulus is back in play, and the COVID-19 surge and the vaccine. The latest news is the vaccine came from Brussels into Chicago O'Hare yesterday via United Airlines, and the CDC's meeting to vote on who should get it first. So this is looking pretty good. Market has gapped up on Friday and last night. And that's where we stand. The futures for Wall Street's major indices fell after Nasdaq witnessed a record closing high in the previous session as investors looked to book profits. Asian equities dropped on selling pressure and month-end adjustments. European shares were muted with focus set on Brexit negotiations. The dollar edged lower and gold extended its slide as prospects of vaccine-led economy recovery dented safe haven bets. Oil prices tumble on uncertainty about whether OPEC would agree to extend output cuts at talks this week. The biggest things to be concerned about, we could see that the risk allocation is mildly off. Money's moving out of silver and gold into copper, and but the indices are off a little bit. The DAX is a little bit up, but the indices are mainly off. The Nasdaq holding on to some minor gains. The Nasdaq currently up 23 points instead of the 11 points shown here. This was printed out at 7:50 Central. It's 8:06 Central, so it changes as time goes by. We see just money coming out of everything today, but not too bad. Chicago PMI at 9:45 Eastern, pending home sales at 10, and Dallas Fed at 10:30. This evening, the Caixin Manufacturing PMI at 8:45 p.m. The overnight session in the S&P is now at 225,000, which is well within the norm. It's normal up to 316,000 contracts. The range overnight's 49.25 points, which is a lot of range. Remember, we used to cover this type of range 50 points per week. We used to average 50 points of range per week, and we've already covered that in the overnight session. Up to 52 points of normal. Overnight inventory is mostly short. 83.25% of the volume overnight occurred below the prior day's close. Market condition overnight is balanced. We're trading on top of the overnight point of control, on top of the overnight mid, and just above the overnight full session VWAP. So that's where we stand. Again, you can get this sheet every morning before the open at twitter.com/conv, CONV trading. I suggest you follow and set an alert to get it when it comes out. It's a sheet that we prepare at Convergent for me to get ready, and we figured we'd share it with the community here as we do everything else. So that's where we stand there. Looking at what we did so far, let's take a quick look at the markets and how they've played out in our review segment. So here it is in a 4-tick Renko. We saw Wednesday rally. We saw Tuesday rally pretty decent, very strong November so far. We saw Wednesday rest ahead of the holiday here, Thanksgiving holiday on Thursday, and basically failing to get back to the point of control of the prior session up here at 32.50. It got to 32, and we had a very weak high left behind on Wednesday and a very balanced profile. Wednesday was basically a holiday trade. It didn't really test up. It didn't touch the naked point of control from Tuesday. It did not touch the prior close, and we closed quite even. Wednesday didn't even break its IB. You could see it is what we would call a non-trend day on Wednesday. So Thursday was a holiday, so you'll notice here that I've scrubbed out or removed the data for Thursday. Thursday's just not a valid day. Reason being that Thursday did not have the underlying equities trading for this particular product, which is the S&P 500. Friday, however, the New York Stock Exchange and the NASDAQ, or the equity market, was open till 1 o'clock Eastern or noon Central, and the futures were open with it. So we are keeping that day intact. Friday, we saw a gap Thursday in that extended session. On Friday, we saw another gap. We saw an open auction out of range, testing 42 down to 37 and a quarter for the opening swing, and then extending that down in what looked like responsive selling back into Wednesday's range. Then suddenly it tests the high by 3 ticks, and then it finally sells off. This must have been a very confusing trade. It's one of these whiplash type trades. Once it started to fall off, it pulled back to the mid of the session, and then it fell right off, and it went right to the 36.27 prior point of control that was put in on Wednesday. So the market was back on balance momentarily on Friday, and then from there we saw some buying, and it left basically a small excess low to reveal some strength into the close. So that's what Wednesday left us with. Wednesday's volume, of course, is way low because the session ended early, and so Wednesday's incorporated into the weekly, into all of our volume and into our levels. So you can see the prior week highs recorded at 36.4275. With the close, the weekly close, recorded at 36.37 even, where it closed for the session. It closed basically on top of the overnight point of control. Here's what's happened since then. This is, of course, the full session. This is the full session. Again, the Thursday levels have been, the Thursday activity has been scrubbed off. And what we did yet last night is we opened, we tested higher, and we've been responsive selling all the way through down to almost 3,600, the low 3602.75. Very healthy overnight range, as I talked about, with a pretty decent volume at 227,000. We have been sitting on top of the full session mid for a while, which is on top of the full session overnight point of control. The market's in a completely balanced condition. We want to watch out for how it responds up here at 36.35. We want to see how that goes. as it's the break of the pullback here and gets us into a low volume node. We want to see how it responds if it gets back into the overnight point of control. It is the last day of November, which has been a really strong month. I mean, we got the election done with in November, a lot of drama, political drama. The reality TV show continues with the current president, President Trump, fighting the election results and continuously losing and being rejected for not having proof or whatever the reason. The recounts that have been done have been the latest one has been in President-elect Biden's favor, and so there's been a lot of drama in November. But overall, what we need to pay attention to is that the month has been strong up with the last day being today. So we expect end of month adjustments coming into today's close. We expect some money to come off the table, and this is what this looks like. It looks like some money coming off the table. You can see the delta here going negative, inventory being short. But overall, I'm looking for inventory to balance out a little bit before we make our next move. There's some important, let's take a look at the composite. Look at how this composite is playing out. Again, I know I keep repeating myself, but we've been one time framing up on the weekly. The week before last was an inside week, and then last week was a short week. But overall, we've had higher lows. There was a strong opportunity last week for traders to take out that 35.42 and a quarter and breach the one-time framing up, and that would have really set us off on a strong path to selling back to 34.40, in my opinion, with all this volume up here. Feeding that push down, and they failed to do so by 6.5 points, higher low by 6.5 points, and then it runs off and pushes near highs. We have not taken out the high in the day session yet, but overall last week's business has been done mostly in the upper distribution, 36.27 even being the weekly point of control, and we managed last week to take out the 36.08, which I had talked about quite a bit, that would be the big target on the upside. So this looks quite bullish to me. Last week took out the prior week's higher low, and it's just really compressing against the all-time high here, 36.45 and a quarter. Last week basically put in new high closes on multiple days. 3 out of the 4 days that it traded in RTH and put in higher closes, higher or new all-time high closes. So that's how things are shaking out currently. What are we looking at in terms of what's expected for today? All right, so here's the chart. So for today, again, those gray bands are the stock zones. For today, well, look at that. It managed to test up and pull back. For today, I'm expecting an open auction out of range. I'm expecting it to bounce out to the upside a little bit. Test the upside, consolidate in the middle, and I'm looking for it to drift up towards the 36.38.75 area, and potentially breaching or testing the 36.40. That's what I'm looking for in the day session. I'm looking for this to continue higher. That would be scenario one. Secondary, balance out the overnight inventory to the upside. Bounce out the overnight inventory to the upside, consolidate, and then have an impulse down impulse down, bringing us back to the overnight point of control, and then we start to drift towards the 23, and we start to look for that 16 quarter double top from a few weeks ago, and then look for the bounce on the close. In either case, today is likely to remain inside of the overnight range. We have a very clear profile here. It's a balanced profile with a range of 16 quarter down here on the downside. And then I'm looking for 38 to 42 on the upside. That's what I'm looking for today. Very low expectations until the close. We do have a selling market this morning. It did breach the mid of the full session, so it looks kind of bullish. It looks like it wants to go up, and that's what's driving the first scenario. But overall, don't have high expectations here. The holidays behind us. Of course, we're moving into December, but today I'm expecting a little bit of action, but I would not make deep commitments on structural trades today and hang on tight. I would definitely not be stubborn coming into the session or coming into the close. Do not fight the move between 2:30 and 3 o'clock Central. That's 3:30 to 4 o'clock Eastern. That'll be the closing range move, and it'll be the end of month. It's not wise to fight that move when it happens. Good luck today, and I'll catch you tomorrow morning. Take care.